Let's get a quick comment on the fundamentals from Mayuresh Joshi, fund manager at Angel Broking, and then we'll get some more views on the technicals and F&O before the markets opens. Mayuresh, good morning. Thanks very much for joining us. It seems pretty much a given now that we will see lower interest rates over a period of time. But Mayuresh, it comes at a very funny time, which is that there may be very little demand for credit. Because at least in the short term, many of the people who need credit simply don't have the sales. So is it possible that we have a scenario where there are lower interest rates, but really there is little demand for credit at the moment?
So morning, Ashu. I think that possibility exists at least for the next 2 quarters, because if you look at the credit cycle at this point of time, it's still in higher single digits, and with the kind of flows that one really expects the demonetization drive to basically ramp up. My own sense is that even if interest rates are heading downwards, and our own sense is that you might expect a 25 bips cut happening in the coming month itself from the Reserve Bank of India, you're probably going to see credit demand come with a lag. So largely, yes, I think it's going to be a problem of sorts for the banks, where they've got plenty of deposits probably to play with, but very little credit to give out. So largely, I think credit would expect it to come back in the first half of the next fiscal. But again, a whole host of demand conditions improving, and again the working capital constraints reducing for a lot of corporates. So credit demand is still expected to be weak over the next 2 quarters, in my opinion.
Right. So, Manoj, I read out a couple of numbers, and which is, if you combined flows out of emerging markets, debt funds and equity funds, it's almost 12 to 13 billion dollars in just a week. Now, I don't have a breakup into which emerging markets they were getting out of, and I'd imagine some emerging markets which are heavy in metals and commodities probably got some money, like Brazil and Russia. How significant is this, Manoj? Because all calculations of futures and options, call and put writing out of context of global flows may end up being academic in nature.
Absolutely, Ashu, you're right in that. See, the quantum of amount from the debt and the equity obviously will not really not even be comparable if you look into what the option strategies are. Is absolutely right. But then the context that we're trying to say is there is a value erosion every time there is the exit happens. Now ideally, if you precisely go back, it is the month of June, July, you would actually seen this ratio peak out, and then from those months we have seen the money come out. Though the quantum is less, so it has always been a buy on dip attitude, let's say, if we have to see in the last 6 months. Now once that happens, and once there was a lot of ambiguity about a lot of global events, now that has almost more or less cleared out, and that is exactly why we are seeing the eccentricity with which the fund flow is coming out. Now generally when this happens, it happens for usually a quarter's time, or there is certain quantum. Generally the way in which the quantitative analysts look into it is usually an annual VWAP, which we call as volume weighted average price. So whatever strategy we are trying to give here would be based on the simple concept that once a weighted value of the average comes on the underlying, that is where we expect the direct outflow to stop, and then they wait for some certain price increment or a value increment where the second leg of outflow starts. So we feel whatever is talking about the put writing or the call writing which happens, or the fund flow might the respite might come in for the next 2-3 days, is just because of this 3 to 4 days of expiry. And obviously we all know the volumes are the highest from the F&O side, which happens in the expiry. So if you look into what the quantum of volume happens versus the net outflow is your cash minus your stock futures in the last 2-3 months, the justification is the risk reward might be more in the be staying on the positive side at this level of 8,000 daily.
Right. Okay, so Manoj, I'll come back to you in just a moment. Let's take a look at what's happening. Public sector banks, sugar stocks, and we need to see the bank nifty somehow hold up if it can at this market. Well, we've opened close to flat at the moment. We'll again start out again. Bank nifty, we'll have to see what the action is. Let's start out with Reliance. Then we'll go on to ICICI, State Bank of India, Indian Bank, United Bank. We'll also take a look at Axis Bank to see, if we are seeing some uptick out there. Issue here is that, if the upticks are only, your retail upticks, and then we don't see that continuing, because you have to have conviction on the futures side to really buy into some of these stocks. Can we also then take a look at automobile stocks, Maruti, and right on cue as we speak, of course, the index just drifted below 80, and as I'd mentioned, then really the supports are built up at 7800. Well, of course, indices can always find another support, but at the moment the support levels are 7800, 7850. That's what you want to keep in mind. Can we look at a couple of cement stocks? We'll start with ACC, Shree Cement, and see if any action has come up out there, and after that some sugar stocks, and take a look at whether they've been able to hold up. Balrampur Chini, you could also put up Upper Ganges Sugar, Dwarikesh. We'll see if they've been able to hold up. One of the things, okay, so Upper Ganges seems to have held up. We'll see if Dwarikesh has held up. So we're seeing a second day of gains, but we'll look at a longer term chart also and see if that momentum is really a build up from a previous chart. And here's Mawana. So sugar stocks, of course, second day of very strong gains. So we'll stick to the technicals and see if that's something that can continue. Yesterday we had Petronet LNG. If you can just bring it up, though it was not a great chart. We'll see if Petronet LNG has been able to hold on. I don't see any significant trend as far as the larger stocks are concerned. See, MCX, if there's a concentration margin, I wish they had mentioned exactly which particular commodities. Is it sugar? Is it some other commodity? Which commodity? Is it metals? What commodities do you see the concentration in? But we don't have that data. Can we just pick up this stock, Omkar Specialty Chemicals, and see what's going on there? Omkar Specialty Chemicals, all right. That's where there was some pretty significant gains coming up. Beyond that, really, it's really just, sugar, where you can see a trend. I don't see any other trend beyond that one, at least at the moment. Vijaya Bank, actually, the longer term chart of Vijaya Bank is pretty good. And I think we have a decent gain now. Okay, almost flat gain out here. So we are in a market where there is very little short position. If you buy futures on the long side, please keep in mind that if foreign institutions decide that they want to spend 500 million going short on the market, you will have to close your position. So that's the kind of scenario we are in. So there's no strong base in the market at the moment. Mohit, did I miss something that you have on charts?
Well, a few stocks are looking weak. One is Havells has continued to drift lower, and this can head lower towards levels of 310. In short, this is the stop loss at levels of 318. Also, Titan is looking weak, and this again is continuing to move lower today. The next levels here are levels of 295 to 290, 293. So short sell with a stop loss at levels of 302.
Right, I'll just bring up Finolex cables, because otherwise it's been a very strong chart today. A little bit of a downtick on that one, but let's take a look at it. There's one Sunil High Tech Engineers. It's been just badgered out of its wits for the last few trading sessions. If you can bring that one out also. I'll go through all the charts for you, but I just wanted to show you some of the stocks. So Sunil High Tech must have lost some 40-50% in the last few trading sessions, maybe even more. Ansal Property is no surprise here. Many of these these real estate stocks are being turned into actually penny stocks, if they can even hold up at the moment. Manganese ore, that stock is down about 4%, if I've seen it correctly, but can we just put it up? We'll see exactly what's happening on that one. And Sumit Industries is to be a strong stock, but no strength coming in right now. Mandar, is there anything that has caught your attention that I may have missed?
Two stocks. First is Engineers India. This stock is showing us good strength in the intraday trade, as well as on Friday it is generated a fresh breakout on end of the day charts. It's broken this resistance at around 277, and today also in the intraday trade is trading with good strength. I think this should show some more upsides. And the second stock which looks good is Petronet LNG. The stock has been has witnessed a correction on the end of the day charts in the last one and a half month, and right now it's again bouncing back. Could possibly see upsides to 388, 390 in the intraday trade. These two stocks are looking good right now.
All right, just in terms of the drift, can we just look at the index? Did I see a small uptick on it at the moment now? I mean, the volatility is amazing. I saw 24 plus on the Nifty, and then suddenly back to 17 down. So obviously there is significant volatility. A quick question from you, Manoj, on the level of just, how quotes are coming out, and I've been watching this for the last 5 trading sessions, that between one tick to the other on the Nifty and the Bank Nifty, the quotes pretty much seem pretty extreme and go back and forth. What does that indicate to you, Manoj?
See, Ashu, it's very interesting, whatever data that we get as FI as index option. Now, the index is a total of your Nifty and Bank Nifty very precisely. You don't really see NXIT or something like that. So, there is a very beautiful pair trade which happens between the Nifty and Bank Nifty. If you see the price ratio of 2.41, that is, you simply divide your Bank Nifty futures, the price, with your Nifty futures, it has a resistance at 2.41, and that is exactly why we expect the underperformance will happen from the banks, and the support is close to 2.31. Now, Ashu, the thing here is Bank Nifty has seen good 24% short built up in the last 7 days, and the Nifty it would be hardly 4%. So the ratio of the buyers on the short side is more from the Bank Nifty, and intraday trade here would be simply go ahead and sell Bank Nifty, because the buying or the break even of squaring of your short position would come at 18,860 on the futures, and that is exactly why we expect the drag in the Nifty would come through this Bank Nifty, and 8,030 to 8,050 is where this respite might happen if it has to happen, and then that is where we see this reversal. Now, the reason why I am saying is the Bank Nifty might not really go below an 18,860 is, see, generally what happens, the concept of volume weighted average price happens in such a way. The last 5 to 6 sessions, if you see this net 24% of short which has come, it has got an average of 19,360 on the November futures. Now, unfortunately, the shorts are in the November future. Either it gets carried to the December future or it gets squared off, and that is when the last Thursday, if you remember, generally it happens around 2:30. We see a spurt or a fall off in the indices which happen, that's an outcome of this VWAP which happens. So we expect that this level of 18,860 or the price ratio of 2.34 between the Nifty and Bank Nifty, that is when this shorting would subside, and we might see some temporary bounce. So as of now, as per the price ratio 2.32, for the levels it would be 18,860 where we start buying the Bank Nifty for our temporary bounce till expiry.
Right. So I will just take a look at the Bank Nifty. If you can give me today's chart and 1 year chart, Vibhish, and also the small cap and the mid cap index, because as we had mentioned, once it drifts below 80, then I was speaking to Mohit also, and he thought we could drift as far as 76.50. I see some temporary support at 7,800, but it's not important. The point is that that's basically how it's looking. Mohit, just a quick comment on if we don't hold at these levels, what do you see?
Well, it seems unlikely that we'll hold at these levels, simply because the up moves that we've seen all the way in the last 4 sessions have been very small up moves, and they've been getting smaller and smaller as days go by, which means there's inherent sluggishness and weakness in the Nifty. We're waiting for some kind of momentum build up on the downside, and today there's a good chance we'll see that, because we've already 25 points down for the day. So if this does break down below levels of 8,000, next levels on my charts are maybe 7,800 to 7,700 on the Nifty.
Right. Mayuresh, you've been in the market long enough. So before I come to the question of, it's not like the index is just behaving in isolation. The index had actually built up to 8,700, 8,800 on anticipation that earnings would remain at 19 to 20%. But now we have a scenario where the structure of the economy or the structure of earnings itself has undergone a change. So it would actually make rational sense for the index to find a new level or a new equilibrium level, rather than continue to float at a level that doesn't justify future earnings.
Oh, absolutely, Ashu. And again, I think there is going to be an intermittent short-term slowdown, and that's going to reflect on corporate earnings. So largely.
All right, as good a time to talk about some telecom stocks. So while we fix that line for you, let's take a look at Bharti Airtel and Idea Cellular. Idea Cellular has been very well. Can you also give me a one year chart on this one? So, once again, telecom is a classic case where the sector may have boomed and exponentially grown, but the stocks have gone nowhere. Actually, Bharti's price is exactly the same it was 4 years ago. And look at the chart. I mean, this is sad. So when people tell you economy is growing and the stock is going to grow, I don't need to explain more to you. Telecom is a classic example where the economy is growing, smartphones are growing, and the stocks are going nowhere. Idea, it's almost a classical reverse chart, which is instead of trending upwards, has been trending downwards. Quick thoughts, Mohit, on these two charts?
Well, as far as Bharti Airtel goes, it's broadly in a sideways range. We've moved low from levels of 380 all the way to 300 and 305 zones. It's got strong support zones around the levels of 295, 300, but there's no real sign of upward momentum. So I'd want to avoid this for now. As far as Idea goes, we've seen a big downmove from levels of 200 all the way to 71 in the last, over like maybe last couple of years. And this is still looking weak. No doubt we're trying to form a bottom around the levels of 765, 69 zones, but there's a good chance we may move lower towards levels of 65 again.
Right. I just want to take some of the sugar stocks again. Movana is up around 17%, Out Sugar is up around 9%, Upper Ganges around 8%. Can we also show the one-year charts on this, because I just wanted to give you an indication of what's happening, but maybe a day trade, I don't know. Kesa Enterprises up around 7%, Dwarikesh around 6%, Dharani around 6%, and these are the one-year charts. So, I mean, if you look at the one-year charts, there's really very little. Either they're in a channel or they're flat. But who's going to fight the fact that as a second day? So maybe you have a day chart. One of the things, Mandar, that concerns me about some of these sugar stocks is they make an accumulation distribution pattern, which is they accumulate very fast, but the distribution is equally fast. Issue sometimes is, unless you're a very experienced technical trader, you will end up holding these, because one of the most difficult things I've seen in trading or investing life is to be able to say to yourself, I made a mistake, I'm closing this position. It just never happens.
Yeah, rightly said, Ashu, and that's what makes the common investor or trader different from the intelligent ones. So you need to have that ability of accepting your mistake and moving forward, and that's what people don't do. See, now, for example, if you look at the moves that we are witnessing in the sugar stocks today, as we discussed in the morning, these stocks, the buying that was witnessed on Friday has seen a follow-up today again in the morning trade. But now again, it is important whether this continues throughout the day. So if you are initiating long positions, then yes, you need to do that with a strict stop loss. That's without fail. These stocks are surely witnessing some upside, so Upper Ganges can see some more upsides to 320, 325 in the intraday trade today. Dwarikesh is also seeing some upside. There's some buying happening in Andhra Sugar as well. So the follow-up is continuously there, but yes, you should trade with a strict stop loss. There's one more stock which I would like to bring to your notice, and which is Oil India. This stock had a resistance at around 421. On the end of the day charts, it's witnessed a consolidation for the last 1.5 months, and today it's breaking out of that. So maybe this stock could see some interest in the intraday trade. Stop loss at around 417, target around 428, 430 in the intraday trade.
Mayuresh, my apologies, your conversation got interrupted because of the line, but please continue your thoughts on whether the index needs to readjust to maybe some short-term readjustments of earnings and maybe even economic growth.
Oh, absolutely, Ashu. And as I was mentioning earlier, I think the estimates that one had pegged at around 14-15% earnings growth was largely in terms of revival of corporate earnings taking place for the second half of this fiscal. Now, with the short-term distortions and the uncertainty in terms of the demand and environment that we might witness because of the demonetization drive, everybody, I mean, is on the same footing that long term is going to be extremely positive. From one short and medium term perspective, the earnings estimates are going to get cut. So to that extent, I think what is going to drive earnings for the markets, I think we're going to see an inherent slowdown in demand coming from the four-wheelers, two-wheelers, apparently at least for this quarter to come. Largely, again, I think it's going to be the capex-driven sectors that the government is going to embark upon over the next few months that will probably drive the capex program overall for the economy. Whether the private capex follows the government capex, I think the large expectations were by the end of Q4 that should largely start happening. But again, that component starts getting delayed. So I think the economy will probably over the next 2 quarters move on the government capex part. So largely, I think focusing on those sectors of the economy, but earnings estimates will get cut down. And largely, again, I think one really needs to understand how the demand situation improves, which is very, very uncertain in both volume and value terms at the current juncture. So I think Q3 results will throw a very interesting perspective in terms of how the earnings for the companies will pan out, largely for Q3, Q4. And then probably once we roll over the estimates to FY18, we'll definitely see some amount of capping up happening in terms of how earnings were expected to play.
All right, Mayuresh, I had a couple more questions, but out of time, my apologies. Next time, hopefully, we can have a much broader discussion. He's fund manager at Angel. Manoj, of course, thanks very much for taking the time to join us from your busy futures and options schedule. Mandar, always a pleasure to speak to you. Mohit, thanks for being in the studios. That's pretty much wraps up Dealing Room. Market Guru is coming up next. Our Market Guru today is Madhavta. In just a moment.